Hello, welcome all. So this is the first session on the financial service, the finance subject of in the semester third. So let's start with the introduction to the financial service market. So these are the various financial service companies which is available in India. They have operations all over India. The SBI Capital Market, then Bajaj Capital, DSP, Merrill Lynch, then Birla Global Finance, HDFC Limited, Housing Development Finance Corporation, the PNB Housing Finance Limited, ICICI Group, LIC Finance Limited, L&T, and Carving Group. So now there are many companies which are offering the financial services. So the demand is increasing. When demand is increasing, people are looking for the more benefits. People are looking for the more uh, earning on their investment. So nowadays the financial service companies are increasing in India. The money is the root of all progress. The money is that what you pay. For thousands of years, metals such as gold, silver, bronze served as a money because they were available, affordable, durable, and fungible, substitutable, portable, and reliable. But shortage of precious metals created problems for the economy, leading to development of paper money and electronic money. Money is essentially a matter of belief, faith, and trust. Money is a matter of functions for a medium, a measure, a standard, and a store. So in the money banking, we had a separate session on the money. So need for financial services. Intermediation. Individuals with the money to save and need to find those who need to borrow, and vice versa. Financial services to do a job lending and collecting payments more easily, cost effectively, and expertly. So, individuals with money to save need to find those who need to borrow, and vice versa. Financial services do the job lending, collecting the payments more easily and cost effectively and expertly. Risk management. Without financial service, people will focus on the savings to cover risks that they might not to buy many goods and services. Financial services helps put money to productive use. Financial services are the economic services provided by the finance industry, provided by the finance companies, provided by the private finance companies, which encompasses a broad range of business that manage money, including credit unions, banks, credit card companies, insurance companies, accountancy companies, consumer finance companies, and stock brokerage, which invest funds and individual managers and some. The term financial services became more prevalent in the India partly as a result of the uh, investment increasing and demanding in India. The investment companies usually have two distinct approaches to the new type of businesses. One approach would be a bank that simply buy an insurance company or an investment bank, keep the original brands of the acquired firm and adds the acquisition to the holding company simply to diversify its earning. A person provides a financial service if they provide financial product advice to influence a person in making a decision in relations to a particular financial product. Why to provide financial product advice to it will help you to person to make a decision for the investment. Deal in a financial product, acquiring issuing, varying, disposing a financial product, underwriting the securities or interest, make a market for a financial product through a facility at a place or otherwise. The person regularly states that prices at which they propose to acquire or dispose of financial products on their own behalf. Provide a custodial or depository services. A financial product or a beneficial interest in a financial product is held by the provider in trust for the client. A financial product is a facility that is arrangement or intangible property through which or through the acquisition of which person makes a financial investment. The investor gives money to another person and the person uses the contribution to generate a financial return or other benefits for the investor. The investor has no day-to-day control over the use of the contribution to generate the returns or benefits. Example, a person paying money to a company for the issue of shares. The company uses the money to generate dividends for the person, and the person, as a shareholder, does not have to have control over the day-to-day affairs of the company. This was the example of the financial product, how it works actually in the market. Manages financial risk, manage, avoid, or limit the financial consequences to them or particular circumstances happening. Example, taking out insurance and hedging a liability by acquiring a futures contract or entering into a currency swap. Makes non-cash payments by ways other than making physical delivery of domestic or foreign currency in the form of notes, coins. Example, facility for direct debit of a deposit account, a facility for the use of checks. So makes non-cash payments. So payments will be mode in the various modes like DD, bank transfer, IMPS, RTGS, right? Or the facility to direct debit from your deposit account. So those who have invested in the financial products, they have know they knows about the investment, how it's happening in the market. We have to register your one saving account to the product, to the company, from where your money will be getting debited every installment for every investment type. Financial services industry. Financial services are economic services provided by the finance industry which comprises of deposit taking firm, commercial banks, credit unions, finance companies, property and casualty insurance companies, pension funds, investment companies, and mutual funds. Professional asset management companies are there in India, which where they also includes in the financial service industry. Institutional investors also there. Then securities firm like investment banks, brokers, dealers, and mortgage banks. So overall, in these different industries, like in different types of investment we are having in our financial service industry. Kind of financial services: personal and corporate. So bank and credit. Personal, we have a current account, saving account, then retail deposits, traveler checks, consume finance, credit cards, house mortgage, insurance, life, non-life. Securities and brokerages, equities, broking. Personal, we have a broking unit, trust, pension funds, right? So under the corporate, the banking is offering loan guarantees, exposure credit, CC, overdraft, leasing, venture capital, business loans, international lending, and foreign currency deposits. These services are offered by the bank for the corporate. Insurance, non-life exporters, liability insurance, broking, reinsurance. So, for personal, we have a life and non-life, but in the corporate, we have no life. So, the corporate finance, securities market, fund management, corporate advisory. So, securities and brokerage for the corporate, so they can offer the corporate finance, securities market, fund management, corporate advisory services. So marketing of the financial services characteristics intangible cannot be visually communicated in advertisement, right? Inseparability of products and production and distribution, direct sale, lack of special identify as product are similar, emphasis is on package, branch, location, staff rather than product. So heterogeneous depended on human factor, technology, same person, ATM may render service separately each time. So this parts comes under the marketing. You don't need to focus on here. You just focus on the financial services. What are the financial services? Their term, the characteristics of the financial services. What kind of services financial services are available in India, and many other things. Okay. So in the next session, we will be focusing on. Let me check which topic is pending. Just hold on. Okay. So we have a growth of financial services topic of unit 1 that need to be discussed, so we will discuss, don't worry. So we are stopping here. Thank you, best wishes.